Welcome back. You're right in the middle of Prime Biz. Now, Stats SA's data out today shows that consumer price inflation for December was at 4.7% year-on-year, and this is in line with market expectations. It was at 4.6% the previous month. Economists say that the increase is mainly due to the transport category due to the fuel price increase in December.
Contributions to the headline annual consumer price inflation include a decrease in the food category, as well as housing and utilities. The dissipating effects of the drought contributed to the decrease in food inflation, despite the ongoing water shortages in the Western Cape. Economists expect inflation to be on a downward trajectory in the coming months, supported by the expected fuel price cuts. This is on the back of the strong rand countering the increasing oil prices.
The rand is busy strengthening as well, and we've seen that even the December number, the main culprit, it was the petrol or the transport part of it. I mean, it managed to increase from the 0.6% in November to 0.9%. So transport continues to be the main culprit, but the likes of food, stuff like that, they're all okay. But yes, the strengthening rand should be able to help us when it comes to the firming of oil prices, so they should be able to cancel each other going forward.
Consumer inflation is expected to remain within the Reserve Bank's target bracket, but there are upside risks to inflation, the biggest being the volatility of the rand. Despite its recent gains, there are various factors that can impact on the local currency.
For us looking forwards would obviously be, what is coming in the near term that could cause currency weakness. One of those issues could be a credit rating downgrade from Moody's. They're the last agency of the three key agencies that have us on investment grade. So we could drop to sub-investment grade because they have got us on a negative outlook and they're reviewing us to do so. Of course, the budget comes first, and they'll look at the budget. If there's insufficient fiscal consolidation or tax increases to such an extent is going to strangle economic growth, if there's insufficient reform on governance of the state-owned entities and a number of other factors, then of course we could be in line for that credit rating downgrade, and obviously receiving that downgrade would cause currency weakness.
Inflation is expected to average 5.4% this year. Economists believe that should the rand strengthen notably further on a sustained basis, the Reserve Bank may consider an interest rate cut. Gloria Musi, SABC News, Johannesburg.